right, then it is 6:01 on Tuesday, January 27th, 2026, and this is the Finance Committee of the City of Stoughton. I'll call us to order, and everybody is present, and we have a quorum, and I can certify we are in compliance with open meetings law. Public comment. Don't think anybody registered. Any communications from committee members?
The next meeting, we might move up the time, right? Is that the plan?
Yep, so actually the February 24th, so not the next meeting, the meeting
one
after
after.
that will be at 5:30 PM due to a public hearing. So,
Yeah.
but we had enough responses for a quorum, so we're good.
Yeah, so the plan is we're gonna start finance early, then we're gonna have a public hearing with the DNR, and then we'll have the council meeting after that, which we can knock it all out in one night. It saves everybody a trip in. So that's the hope. So hopefully we can herd the cats.
Or the DNR can herd the cats. All right. Hearing no other communications, we have presentation. Tammy?
Yes, thank you all for your time tonight. I appreciate you bumping me up a little bit on the agenda. Can everybody hear me okay? And certainly let me know as well. You should all have the packet in front of you. If you want me to share my screen and go through the presentation, I'm happy to. But in any case, let me know if you want me to share or if you have it.
We have it.
Okay, perfect. So thank you again. And some of you have seen me in the past. I believe I was there in August. I'm Tammy Oshevsky with Ellers, and I have been working with your finance team just to get an understanding of your policies, practices, some of the procedures, as well as where your current holdings are. So the last time I stopped in for a visit, I went over the current status of your investment program, and I do have some recommendations for adjustments to your strategy as well as your cash holdings versus fixed income holdings. So one of the things that we thought would be important was to come back and provide your group an overview of some of the services that Ellers provides. You are certainly familiar with other team members that you've seen across the board for debt issuance and some of your TIF management, but I invest proceeds for debt issuance or general funds or reserve dollars. So you'll see me across a few different facets of our firm, and certainly as things change with the city, or if you have adjustments to your fund balances, you may see me as well if we recommend any significant changes. So tonight I thought we would go over just a brief presentation of our services so that you can understand who I am and who Ellers Investments really is. And then, of course, we will talk a little bit about the recommended changes to your policies, as well as some strategy shifts that we would recommend for your investment program. If you take a peek at the first couple of pages, it's really just an overview of Ellers as a firm. We work with municipal governments and only municipal governments. So all of my clients are cities, towns, villages, and counties. I have a few school districts that we work with as well. But our entire goal, of course, is to provide you guidance and expertise in making investment decisions, and they are geared specific to clients just like yourselves. So Ellers as a whole, we work with a number of municipalities from debt issuance to debt management and investment management. And tonight, we'll just talk a little bit about your investment advisory services. And I included a page with a few of the team members that would be serving the city. I always want to make sure people know it's not just me. So if for some reason there is a need for a quick response, there's a whole team of individuals that the city can reach out to. Our goal, of course, is to provide you some guidance and expertise on the investment decisions, but along with that is really taking some of that off of the shoulders of your finance team. So if we go towards the next page there, it's actually
Tammy? Sorry
Yep.
to interrupt. I
Yeah.
don't know if we're having technical difficulties, but would you mind sharing the presentation?
Oh yeah, of course.
I don't know why we aren't able to bring it up on our screen. So if you wouldn't mind doing
No
that for us.
problem. Yeah, of course. Let's see here. How do I?
Oh, okay.
Okay, can you guys see that now? Oh, now it went away. Hold on 1 second. Okay, now can you see that? Hopefully this is. There we go. And of course, if I go too fast or anything, please let me know if you need me to go over anything again or if you
Okay,
have questions.
we're still not seeing the presentation.
Really? Okay, let's see here. I'll try to redo it here.
You want to share it? It's in the
Oh.
packet.
Here we go. Okay. Now can you guys see that? Hopefully.
Are you going to bring it up?
There it is.
You see my screen on your screen?
I
Okay,
can
here.
see it.
Yep. There we go. We're on page 4 there. Uh, thank you for sharing that. Yeah, I always feel bad when I'm not sure what somebody can see, but this is helpful. So, of course, kind of to reiterate, our goal is to make things very efficient. Our reporting suite is very customizable. It's easy to integrate within your existing tools and resources, but the goal here, of course, would be to make some time saving for your team. One of the components that we recommend when we discuss investments as a program is we don't look at just one account or pieces of the accounts. We really look at the overall portfolio for this city. And one of the goals that we have for you is to allow for that competitive price and competitive security selection. So if we take a peek at the next page, one of the things that is included in our services is competitive pricing when we bid out any securities. So we utilize local and regional banks. We utilize it's basically a national trading desk. It's an automated trading system. So every investment that we're placing on behalf of the city, we are putting through the systems to ensure that the price is competitive and the rate that you are seeing matches up with industry standards. And especially across broad markets, it just gives you a lot of access to issuers as well as securities that may not be available just through some of your local banking partners or local brokers. One of the examples that we often reference, and this really was a large purchase for a debt security, and we built this particular request around a specific time frame, and the maturity date had to match up. So when we built this offer, we basically saw a cost difference between various brokers ranging from $3,000 to $12,000. So it doesn't sound like a lot of money when you're thinking about multiple $1 million transactions, but that can add up. So when we're providing these services, that is one way we can add some value where your team, if they had to call around to various brokers or email a bunch of brokers, from a timeliness standpoint, you may miss out on transaction opportunities, but it also takes up a lot of their day-to-day time as well. So if we take a peek at that next page, we're really just streamlining the process for you. And one of the things that I like to highlight for our new clients is really the process. So we've already gone through the process of reviewing your investment policy, and we do have some recommended changes. We also have built a cash forecast based upon some of the current holdings. And now we have an investment plan, which we will look to implement within your team, as well as keeping a keen eye on your banking and treasury management services so that we can ensure that from a cash standpoint, the city always has the operational liquidity that is necessary while also seeking to maintain compliance with state statutes and policies. If we go to that next page there, I also like to highlight the fact that everything is very easy to move back and forth. So from a money movement or access of cash, your funds are always in the name of the city. So we hold everything in third-party custodial safekeeping. And as funds are needed, they can be transferred directly to your bank. We handle everything through ACH or wire transactions, and we charge you no fees for that. From a reporting standpoint, we do want to make sure that the proper individuals have access. So we will be working with the city as well as the utilities on access. And one of the ways that we can help ensure control is to provide access to various accounts based upon roles and responsibilities. One of the things that we will discuss later with your investment policy really focuses on delegation of authority. So there is view-only access available for support staff or team members that should provide reporting for individuals, but they may not have transactional authority, and we can differentiate those by roles. And if we go to the next page there, this is just an example of a 12-month forward income projection. So in your monthly reporting, we make it very easy for your team to be able to see the maturities coming up as well as income over the next 12 months. And that next page just summarizes the solutions that we've been discussing with your team. And really, we built some parameters based upon your current policies as well as best practices. And we're focusing now on building some strategy around long-term fixed income so that you have some predictability with your income as well. And the fee, of course, we're very transparent about fees. Everything is based upon assets under management, and we do not charge any transaction fees or travel fees. I was at the utilities last night, and I like to remind everyone I can come see you as frequently as you would like, but we do typically recommend at least once or twice a year, and we don't charge anything extra for that. We do have periodic meetings with basically your finance team just to ensure that everybody's on the same page throughout the year. And again, that's all inclusive with our fee. And your average fee across the board for the city and utilities combined is about 0.17% annually. The maximum fee that you will see is likely about 0.20%. So we put the maximum on there so that you're never surprised by that. And then I should ask, are there any questions at this point before we go on to the next couple of pages, which just summarizes the strategy recommendations that we are putting in place? Okay, so if we'll take a peek here at the next couple of pages, we actually put together, and you have seen this, actually, this was part of our presentation back in August. We looked at what the city had been doing currently, and we made some adjustments on the cash levels as well as locking in some longer term fixed income. And it isn't dramatically changing your income estimates, but it is putting some predictability on those income estimates. So the key here is as short-term or cash liquid rates have started to decline, the city had a heavy portion of their investments that was liquid or easily liquid, which means that as that rate comes down, you are likely to see a decline in your estimated annual income. So by locking in some longer term investments with fixed rate securities, you still have periodic maturities for liquidity purposes, but it is building a little bit more predictability on the next few years for you. So you're likely to see between $850,000 and $905,000 each year just in investment income. And of course, the fees come right out of the account, so it's never something that you see a bill for, but you will see every month on your statement the income that you've earned as well as any fees that have been deducted. And if we take a peek at that next page, this just showcases for you that, we look to lock in some yield and have some predictability that does fluctuate month by month. And just this is an example, so you can see some of the month by month maturity schedules that will appear in your investment program. And then the last page, I did explain to the utilities last night. I believe this came up in regard to reserve funds. So reserve funds, they're tied to a specific dollar amount based upon your bond covenants. So if you issue revenue bonds, for example, you may have to have a reserve amount. And that portfolio, we typically, as an example, may not be designed or set up in the same way that a general funds portfolio is, because those underlying investment market values may fluctuate. So just to highlight for you, the example is that if you invested your general funds, it may not look the same as your reserve dollars. So when we are making recommendations, we will take into consideration your policy as well as any fund specific parameters that might be necessary. Any questions on that summary? Okay. And then Lisa, did you want to go over the investment policy right now briefly, or did you want to wait on that?
If you want to do an overview of the policy, tonight we have two resolutions before you. One is to change the policy with recommended changes. I will mention it, as Tammy had stated, it did go to the Utilities Committee last night. They did approve the changes, only one amendment of, in there you'll see for the city side, it's the finance director and city treasurer must agree upon any investing and things like that. So the utilities will have two people, it'll be Shannon, the utilities finance manager, and Adam as the director. So if you don't mind going over that, but just know there's the investment policy and then adding Ellers and the count that Tammy can explain for investing. So if you would like to review that, I appreciate it.
Yeah, of course. And it does look like a lot of changes when you look at the actual document, but rest assured, it's really just, one word when it gets changed in a section ends up funneling through the entire document. So to summarize, there were three main components that we changed. And the first one really is just expanding the deposit insurance reference. So oftentimes we'll see FDIC referenced as the only applicable insurance when in reality, NCUA should be included as well, which is for credit union institutions. The second component was changing the electronic links and really the actual detail of permissible investments. So that's really under the eligible investment section. Typically, we recommend that we eliminate any actual statement of or definitions that could very quickly get outdated if something changes in statute. So we traditionally recommend that you highlight or reference just state statute and then detail anything that is specific or parameters that are outside of statute or more restrictive. And you do have two that are more restricted, which is highly rated commercial paper and corporate bonds or securities, meaning that we limit them to 5% of the per issuer amount of the overall portfolio between cities and utilities. The third item that we updated was really just to match some of the GFOA best practices. We updated language across the portfolio to clarify city versus utilities. So we actually updated kind of that language that you know exactly which entity you're discussing. The policy itself applies to both. So we used organization in that instance. And then, of course, we confirmed some delegation. So as Lisa had mentioned, we focused on the titles and who was actually responsible for the investment program. And then we clarified some of the requirements on, it's not that both people have to be on the call at the same time or both people have to be on an email, for example, to approve a reinvestment. It's really, allowing that autonomy between the entities, if you will, but also providing guidance. So the policy still sets those parameters in place for them. So like I said, a lot of changes, but it's really just those three components that we ultimately updated, and it was just some language modifications, and it did go through city attorney as well.
Just a quick question. In the resolution itself, it does reference changing the investment team verbiage, and it also references the changes to specific investment types because they're already outlined in state, and that's a good idea, speaking as somebody who writes procedures for a living. But I don't see any reference in the resolution to the insurance language, including NCUA. Is that a concern at all?
It is in the language, so we added it in the, let's see, section.
It's in
Actually,
the
it's in a couple of
policy. Sorry, Tammy,
sections.
it's the resolution
Sorry.
I wrote. I didn't include a whereas with that. We can certainly amend the resolution to include that.
So I thought I heard you say that there was an amendment recommended at utilities to include the finance manager and utilities director. I just wanted to be sure that that was my understanding, and I didn't see that in a red line policy, if that's the case, but maybe I'm not.
We don't have an updated, because I
Okay.
went last night. We didn't have the updated version yet. I just talked with Shannon today about those
Okay.
changes.
So that is the plan, that there will be two
will
people
be
at
amended,
utilities
yep.
as well, and it'll be the finance manager and utilities director. Okay,
Correct.
great, thank you.
then are there any other questions or concerns that I should address? And I'm not sure if Lisa had informed everyone, but I do have another meeting I need to run to, so I don't intend to rush you, but I just want to make sure that I am available in case anything comes up. Otherwise, certainly, I am a resource to the city, so if something comes up, even after I jump from the call, don't be afraid to reach out. I'm sure Lisa can pass along any concerns or questions as well.
Does anybody have questions on the second resolution for approving to open the custodial account and engaging with Ellers as the investment advisor? Just while Tammy has a minute yet. Okay.
Anything else on this?
Okay, thank you, Tammy. Appreciate your time.
Yeah, thank you all for your time. Have a good evening.
Thanks, Tammy. So let's semi-backtrack to the minutes from 1:13. We have the minutes in our packet. Any questions, comments, changes that need to be made?
Move to approve.
All right, we have a motion by Reeves
Second.
and second by Ninow. Hearing no changes, all in favor, please say aye.
Aye.
Aye. And any opposed? All right, we will approve the minutes. And so now, hang on. We will go to the first resolution. Not sure what number, do we know what number it's going to be yet? Okay. So this is the resolution to amend the City of Stoughton investment policy, as we talked about before. Should we make an amendment at this point to add the NCUA language?
I mean, I would, if we intend to introduce this one on the February 10th meeting, I would prefer to see it so that we would get all the red lines into the policy and also work on the resolution language rather than try to legislate it together here.
That's fair.
And then we can just time sensitive that one for the next one. Well, it is and it isn't because we've seen it already tonight, but it just is to get the language cleaned up in it and ready to go.
I agree. Any further discussion on that? All
Do you need a
right,
motion to postpone it all, or no, just leave it?
just no action. Yep. That was for the first one. Yep. Excuse me. The second resolution is the resolution approving opening custodial accounts with Pershing BNY Mellon and engaging Ellers Investment Partners as investment advisor. There's no edits or amendments to this. All right, we have
Second.
motion by Doom, second by Reeves. Any discussion on this item? Hearing none. All in favor to recommend to council, please say aye.
Aye.
Aye. And doesn't sound like any opposed.
Don't see any plans for a solution to
Just don't try to dive into that pile of money. It would hurt a lot. Speaking of time-sensitive items, the next is R9 of 2026, approving a contract with Becker Professional Services LLC to update 2 existing blight surveys conducted in 2008 and 2009 for redevelopment areas 1 and 2.
So Becker Professional Services is here. We had a kind of a internal meeting with several weeks ago, and kind of what prompted it is they're at a point where they're moving forward on the riverfront development, and we kind of wanted to figure out what we were going to do next. And we didn't have anything budgeted for them to move forward on any other projects. And after some discussion with staff, and I believe at the RDA, it was decided that we could go through and kind of resurrect some of the old work that was done and update it. So I think that's basically what the proposal is. You can come speak to the specifics if you'd like. Thanks for being here.
Yeah, sure. I don't have much to add, but happy to answer any questions. I guess there are 2 redevelopment areas within the city, and this would just be doing a survey of the properties in those redevelopment areas to see, there have been a number of properties that have been updated, redeveloped, rehabbed, and so it would both be kind of checking off the properties that are no longer blighted and updating to see if any other ones are considered blighted to then help the RDA identify potential future projects.
Yeah, and I think during the budget process, instead of kind of speculating on how much money they might need to do projects, we figured we would just introduce them as we went. And then the money is coming from, I'll let you explain that part of it.
It's coming from fund balance.
Yeah, I think that's where it's coming from. So obviously that would be something that, we would keep an eye on and make sure we're within our policies.
Any questions? Lisa?
Just one, and so when this is completed, then it'll be reported out to RDA, and I guess just a request, I'd be interested in seeing that as well. So at whatever future meeting, whether that's council, I guess, maybe would all be interested. So that would
Yeah.
be my only request. Thanks.
I think that's fair. I think the hope is to kind of get our arms around where we've been, where we're at now, where we're going. And then, use the information to, be strategic on kind of the next projects that we do. I know there's some interest in doing some projects, but it's been a while since we've looked at some of these buildings, and there may or may not be some changes in grant availability and, things like that we might discover along the way. So I think that Becker's always been a good resource for us to kind of sniff them out.
Any other questions? Any motions?
I will recommend that to council.
Okay.
I'll second.
Okay. Recommended by Schumacher, seconded by me now. All in favor, please say aye.
Aye.
Aye. And no opposed, so we will recommend that to council. Thank you.
Thank you.
Excuse me. Next item is R10 of 2026, to amend the 2026 budget to reallocate operating levy to debt service levy. And I'm going to let Lisa explain this.
So on the levy limit worksheet, there is an adjustment that you can make for single-family residents from the prior year that receive occupancy, as long as they meet some qualifications of less than 0.25 acres and is 80% of the homes sold within that year. In the list that was provided, there were duplexes within there. So once we made the adjustment, submitted the information to DOR, and they took a look at it, discovered that there were duplexes included in there, so none of the single-family homes qualified. So to keep the levy amounts the same, in total, it would just be having to do a budget amendment from the operating levy to debt service levy, because you can make an adjustment on the levy limit worksheet for general obligation debt.
That was clear as mud, huh?
Yeah, I was going to say, Any chance of like layman's terms, what that means?
So basically, the adjustment for the single-family home, the ones we submitted don't qualify. So that adjustment we can't use. You can do an adjustment for general obligation debt, so it'd be moving that adjustment from that line to the general obligation line. So moving it to the general obligation debt, it has to go into debt service and not in operating. Does that help?
Yeah.
Okay.
And if we didn't do this?
Then there would be either penalties or other options that would need to be explored.
Sounds like we should do it, huh?
Most likely. Any other questions? Any questions better than mine?
So that was on duplexes. Is it the same on condos too?
I guess that's a
That's a
single
trick
family,
question.
if they qualify as single family.
Okay.
I
I don't know.
I don't
'Cause
know.
I know we had some
Did it?
condos too.
Okay, so condos don't. So truly just single family residential.
Okay. Thank you.
All right, any other questions? All right. Do we have a motion to recommend?
Make a motion to recommend approval of the council.
All right. we have-
Second.
All right, motion by Reeves, second by Nenow. All in favor, please say aye.
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 And any opposed? All right, we will recommend to council. Another time-sensitive item. This is R11, 2026, to amend the 2026 capital budget for Opera House boiler replacement. And it sounds like we had a failure that we have to fix now.
My understanding is in the 2028 CIP, we had a boiler replacement at the Opera House, and it didn't make it. So we're looking at replacing it now, and we need to do an amendment in order to have the funding to do that.
Yep, so, and then what Brett had suggested then is moving the fire department controls HVAC to 2027 to kind of offset the cost. I mean, the boiler is a lot less than the fire controls, but kind of trading those projects, even though the boiler was in 2028, the HVAC controls should make it till 2027, but they wouldn't recommend going any longer than that.
Okay, any questions on that? Sounds like another one of those things we need to move on.
A motion to recommend to council.
All right, motion by Schumacher, second by Doom. All in favor, please say aye.
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 And no opposed, so we will recommend that to council. Next item, we are busy tonight. This is a resolution adopting the revised tax increment financing application and policy, which we discussed at the last couple meetings, I believe.
So this is a different amendment to the policy. It doesn't have anything to do with the sustainable amendments that we made. This amendment is changing so that the mayor has the authority to enter into a cost reimbursement agreement, as well as, once that's signed, then move forward if we need to contract with Ellers to do a pro forma. So this is making the timeline shorter, and just rather than having to go through all these motions, that the mayor is granted authority to do the items that we need, the cost reimbursement right away, and then should we need the pro forma analysis, rather than coming to finance and council and delaying that process. And then there's another amendment in there with the change in law for notes that can go out to 20 years. The bond language within the policy, we're removing all of that because there really is no reason to issue bonds, as we discussed before. because you can do notes for 20 years. So bonds used to be 20 years, notes used to be 10 years max, but now they can go to 20, so no reason to issue the bonds.
So, yeah, basically, we're just trying to streamline the process. Instead of coming to finance and then council, we can engage right away with the developer and, you know, get going on the project. The sustainability group will continue to work on that portion of the TIF policy. So this thing is still kind of evolving, but I think every step that we're making, it seems like we're trying to improve it.
I thought this one was a good idea, just, again, to streamline that procedure in there, so keeps things sped up a bit. And I don't know that we would ever have in a situation where we would not want to have a cost reimbursement agreement, so it just makes sense.
Yeah, it really comes down to the amount, and I typically lean on the finance department or the city attorney to, you know, to set that number based on the project. And certainly utilities has their own as well, so I don't know, you know, how this matches with their policy, but they have their own policy for their cost reimbursement.
And this doesn't, I mean, reading this, it doesn't authorize you to spend money, it authorizes you to enter in so that they
Right.
can pay us.
We're taking money in.
Exactly.
That's why we're building the vault.
Any other questions?
Move to recommend to council.
All right, we have a motion by Dune,
Second.
second by Reeves. All in favor of recommending to council, please say aye.
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 And any opposed? All right. Maybe we can use that old boiler as part of the vault. All right, next resolution is to amend the ARPA funds for revolving loan program approved in R72-2023 and amended in R50-2024. Lisa, did you want
Go
to,
ahead.
or Mayor?
Okay, so there was a recommendation in a meeting, the best I can explain. Well, the ARPA funds need to be used up by December 31st of this year. There's still 100,000 that was allocated to the revolving loan funds that haven't been loaned out yet. So it was recommended that we increase the amount from 50 to 100,000 to 100,000 if there would be a situation that someone could use it. Chris, I don't know if you want to, the specifics that they need.
So, so this is citywide, and what it would be is if it's an existing building and there would be a lien put against it for the amount of the loan. And it's just for the ARPA fund increase, so that has to be spent by 2026, which is why that's here tonight without, like, first having long discussions, so.
Are there potential projects that would mitigate, or that would
There,
maybe be looking to use it?
Yeah, they're not necessarily earmarked, but we've had a couple of people approach with like, what would be, safety, you know,
I'm assuming sprinkler
upgrade,
systems
yeah,
and things,
exactly.
so.
And so that's kind of where we were hoping these funds, but it would be citywide. If somebody outside of that realm came in, you know, they would be eligible. It would go through the same approval process that you guys have been doing currently. And I know this was a discussion that Katrina was in the room for, so that way she can start marketing it as well. And
Lisa?
Yeah, and the way we have it set up is the administrative fees for Katrina to process applications and do the work is built into the interest rate. So there's really no cost to have, you know, Becker do any of the work on his revolving loan funds.
So I wasn't clear to me, I was actually, had a short conversation before the meeting, just trying to refresh my memory, because I know the RDA ARPA funds, or the RDA funds, they made decisions about that, but if so let's say there is somebody who is requesting 90,000. I'm just maybe need a refresher on the process, the viability of the project and who makes that decision. Does it come back to finance for a look-see on its merits, or remind me how that
Sure, I think
would work?
currently what happens, if somebody were to reach out and say, hey, we're interested in the revolving loan, or if we're out soliciting and somebody says, yeah, I'd like to learn more about that, then Katrina typically would go through kind of the process. It's administered by WIBIC, so WIBIC does the underwriting. They, do a lot of the paperwork. If they need a business plan, they can provide those types of services in order to be able to apply for the loan. And then we basically help process it and make sure that everything gets submitted completely and accurately so they can do their work on their end. Am I missing anything?
I guess I don't know if there's a difference between like the RDA, RDA revolving loan fund versus the city and how that.
Yeah, in the past, we really didn't have any security. And I think with this one, you mentioned that we're trying to build some protection in case,
Yeah.
somebody defaults.
So the RDA revolving loan fund, I think, is specifically certain districts, like it can't be citywide. This can be citywide and is going through the WIBIC. RDA goes through RDA, and it can only be in those pockets. This particular one, after the discussion, it was for building improvements citywide. We can't, and a lien on the property. There needs to be a lien on the property put in place so that if it folds, we have some mechanisms in place.
So WIBIC is basically a third party that helps to administer it. It's,
Sorry.
I forget what the acronym means, but
It's Wisconsin Women's Business Initiative Corporation, but they serve all businesses, so.
So just as a follow-up, I guess that would be the message that would need to be abundantly clear, is that this is not for operational, this is not for startup, at least in my view, that
it could
this
be.
is, I would not approve that then. I have a lot of reservations about the viability, and do we want to be in the business of looking at the viability of a business and their financial stability? I would not be in favor of operational costs.
So it does call out, it says the city desires to increase the maximum loan amount to $100,000 for projects addressing existing building rehab. So that's what it calls specifically out for building rehab.
Because I think you said something different, so then
I
I
did
was
say
like,
something
that
different,
raised
because
a
in the
flag.
past, they were able to use the money for operations or building improvements, but you're saying that we changed it, so.
Well, in this case, keep in mind, this can be revisited after 2026, because that's what our focus is, right? So in the past, it was 50,000, but it was earmarked for just startup businesses, is my understanding. And this is not my wheelhouse, guys, so but what we decided to do was increase it to 100,000 with earmarking it for rehab of businesses and then putting a lien against that. Rehabbing of buildings and then putting a lien against that building.
Yeah, because I think it would be much easier to see if they put in the sprinkler system, and then that's my follow-up. I don't envision WIBIC running to check on that, so I would want to know who's going to be checking to see if they put the new facade on, the sprinklers, the new lights or whatever. So I feel like we'd probably want to tighten it up.
Yeah, as long as we can get the information to us, especially now we're going through the secondary, E-plan, thank you. We're going through E-plan, we can see those the approvals in live time versus when they're at the state. So we could do that. We just have to make sure WIBIC's getting us the approvals back, which, are they sent directly to you? Okay, so that needs to be addressed, so.
Any other questions about this?
I guess if there's no urgency on this, I feel like I would like to see things tightened up. I don't feel like there's a good flow yet to bump this up to 100,000. We've had challenges with the 50,000. And I feel like maybe there needs to be a few loose ends if we don't have anybody waiting in the wings. I'm not prepared to say no or yes at this point. I would like to see a little more work done on it.
We don't have anything imminent, do we?
I think maybe what prompted this discussion was there may be a potential building rehab project that we haven't talked with them directly about if they are interested in revolving loan funds or not, but I think that was maybe the thinking, is that there may be some projects coming up in the pipeline of building
2 weeks
rehab.
isn't really gonna,
No.
And we could still engage them without,
Yeah, absolutely.
yeah. So I guess we can certainly bring it back. Do you have enough direction to know what questions that
Yeah, I
Reeves
think
would like answered?
the real question that we need to see is when WIBIC approves the applications, how they're making it back into the city, and then that's really because that's what we need to know. And so then if they're coming back into the city, making sure the planning department has it and we can check it against the building permits pulled. So,
It's the tracking that I don't.
yeah.
You know, and if there was a specific plan, you know, I think it's fine to have those conversations that may be, but the sooner they got that information to us, I think we could, you know, I'd be more willing to consider a specific plan and then tidy up the tracking. You know, that feels better than just throwing it out there without really being clear about how we're gonna do that and what might qualify. Thank you.
all right, so Lisa's recommending that we take no action. Is there any objection to taking no action?
No, and I would just say if something comes up, Katrina, just let us know so we can, you know, at least keep them on the line until we sort it out.
Ozzy, you raise your hand.
I just have a question. What happens if we don't get this money spent by the end of the year? It goes back, correct?
Correct.
Yeah.
Yeah, so I don't think we want to delay it too long because I know how long it takes to get paperwork done, so.
Okay.
All right, thanks again. And the next item, and unfortunately, oh, it's the EMS. I have to fast forward here. EMS cash flow.
Mayor, if you could bring up the cash flow. So as discussed during the budget time, EMS wanted to change the pay structure for volunteer EMTs. And the concern was we would want to bust out the cash flow. This is really small up there, but I'm first just going to explain generally how this works. And I highlighted colors to help isolate by groups. So the green section is the various revenues that come into the EMS fund. The orange section is the operating and maintenance. And the blue section is capital items. So your capital purchases, the debt payments, any bond proceeds or note proceeds that come in. And then that gray section is looking at cash flow and then looking at fund balance policy, as well as, even though this isn't revenue debt that requires in the covenants debt coverage requirement, it is still good to look and make sure that you're meeting at least 1 times your debt coverage. And I'll explain what that means. So that first gray line, the single line, you want that number to be at least 1 times your annual debt payment. It's better to have more for cushion purposes, but that's a metric that utility or revenue debt issues look at. So looking at going left to right, we have the 2024 actuals, and then we have 2025 estimated. Again, we're still going through year end, so this is best estimates that we have so far. Plugged in the 2026 budget, and for 2027 and 2028, as we saw in the budget, there's planned increases for certain fees, and those are incorporated in this cash flow. Looking then at the Capital items, you'll see that there is nothing after 2030 because we only have the 5-year capital improvement plan. So if we could get more information, we can continuously update this. Then we could plug in that and see how that flows out. But what you'll notice is eventually looking at that top row in that big gray section, you can see that we're going to start to go negative cash flow. And then we're going to start not meeting debt coverage, and then eventually not meeting fund balance policy in orange. So the debt coverage is the red. Above that, the orange is the fund balance policy. So what we wanted to vet out was, okay, if we do this increase this year, is it going to cash flow? Based on the information that we have, with the operating and maintenance expenses increasing 3% annually after the budget year, it will for a few years if everything should work out. This doesn't include any changes to the proposed the town fire or EMS charges, but even what we're looking at, the increase would be small. So it wouldn't really affect this cash flow. So this is something where it appears that doing that increase pay structure change for the volunteers would work. This is something I would want to continuously update every year and make sure we're not falling behind and not doing increases consistently, as we can project out and see like, okay, we're going to have a cash flow problem. Let's start making increases now or project out when we're going to need to see them. So during budget time, as I mentioned, we were going to hold off on the increases to make sure that the cash flow would work, showing based on the information that we have, it would, but definitely something I would want to keep an eye on. Just make sure that we're collecting our revenues. We have a large outstanding receivable balance. Just mentioned that. But this is what, if you have any questions, I'm happy to answer it.
So it works for a bit, and then we'd have to consider some increases down the line.
Right, because we only show increases
Right.
in 2027
Yeah, I
and
saw that.
2028 because during budget time, that was what was projected out.
The increases are increases that we do, or does it include the federal government as well?
No, this is the increases that we do on our fees.
Okay. Just for the pay? Are you talking about the revenue?
For the ambulance fees,
Yeah.
so that we charge out, whether it's advanced life-saving or basic life-saving, they were increased a bunch for 2026. 2027, those are going to increase by like $100. And then there's an increase for non-transport. But our main fees would increase again, 2027 by 100, 2028 by 100.
Okay.
Lisa?
So I might be getting ahead. So is this deficit one of the reasons you're looking at new agreements with surrounding counties, or is that a whole different matter?
That's a whole different matter.
Okay.
It's just looking at the calculation, making sure the fair share is being allocated appropriately.
Okay, so there was discussion and possible action. What is the possible action that we'd be looking at here?
If there was any direction, I guess it's in the budget, so this we can take to council as well if we want it presented full council. Otherwise, if there is, I guess, it's in the budget, so we can apply it. It was more of bring forth a cash flow, show that it would work before we would implement the pay structure change.
So is there any risk, though, of not having funds beyond, long-term, or, I think that's the right thing to do, but what you're saying is that we need to have some sort of new plan, or we're not going to meet budget
It
for
would
the-
just be, I would update this every year so that we're monitoring it to make sure that we're not falling behind, but stay on top of the increases that are needed. So this is demonstrating, okay, we
Gotcha.
plan increases until 2028. Well, we're going to negative cash flow in 2031. You know, if this all happens exactly as it does. And
Gotcha.
obviously, things change, so we would continuously update this on an annual basis to evaluate if we need higher increase in 2027, 2028, or increases beyond that.
I follow, thank you.
Yep.
But this piece is just something that also goes into as we evaluate fire EMS safety services moving forward, true? This is just one piece that's part of that.
I'm sorry, I guess I'm not following.
But just that, we don't, we're monitoring how this is progressing through, but there's a larger project that's in place that might take care of, because if this is introducing some structural deficit in there, that we have a different plan that could head that off.
Yep.
Okay. So do we
I
want
think
to
it's just
recommend?
a good to know for council. I mean, I think it should be presented just so that this is a known out there. And
Right,
then-
yeah, that's what I was going to say is, we can bring this to council, although it wouldn't be this meeting. It'd be probably the next meeting, right?
Next meeting.
Yep. All right. And then we also have, next item is the proposed fire EMS charges.
Okay, I got 3 minutes to get it done. So again, it's small, but do your best to follow along. So currently, we charge out fire based on a percent of the budget, and we charge out EMS on a per capita basis. What we're looking at in the, and there's the current way we're charging out fire there is the, looking at the operating and the capital budgets and then doing a look back for what we actually spent and adjusting the fees that way. On the EMS side, it's a per capita basis that has gone up by the CPI increase each year. So back when the first agreements were started some years ago, there was a dollar amount per capita that was decided on, and then that has just increased by the CPI index every year. What we're looking at proposing going to is taking into account the budget based on population and the budget based on the equalized value of the portion of the district that we're protecting. So the EMS charges would still be based off of population, but we're looking at the budget for EMS and basing that on the population, and then on the equalized value for the fire charges. And so, Mayor, if you go back to the other spreadsheet, you can kind of see it elongates everything out. So it takes a look at where the each of the towns that we cover, the population for the coverage areas, then the assessed value of the coverage areas, what their assessed ratio is, so we can get to what their adjusted equalized value for the property that is included in that fire district. Looks at the budget for operating expenses for fire and for EMS, as well as their capital outlay or their debt service portions. And then also includes a look back similar to what we had on the fire, but we did not have an EMS, so that we can see if we are over or under charging and adjusting that accordingly through the town fees process. So if you look in the bottom kind of section where the second green number is, you can see where there's a column that says prior year 2025. So for 2025, we charged out $485,000. And with the proposed way that we're charging things out, we would go up to $564,000. You can see then on the, just to the right there, what the percent increase for each of the towns would end up being. And so what we're trying to make sure that everybody's kind of covering their fair share. We've not looked at it by taking into this equalized value piece before. That was something that I kind of brought to the table. That's a way that Madison does their town charges for the villages and towns that the Madison Fire District covers, which is where my experience came from. And so by taking into account, you are protecting the property value, or excuse me, the value of the property in that area, not the property value, But, so that way, that's directly linked to what your fire coverage, what your insurance coverage is, and what your ISO rating is. And so that way, we're trying to link those two up together, just like on the EMS side, we're directly covering the population that's in that area and trying to link those up to budget. So that's kind of a quick overview of what the proposal is. And I'd be glad to answer any questions.
I think this makes a lot of sense, and my question is, have you had any preliminary conversations with the surrounding townships yet?
I don't believe Chief has asked them yet.
No, we haven't talked with them. Part of what's driving this is we will be having to renegotiate the fire contract anyways, because that expires at the end of this year. There's no current renewal clause with it, and the goal is to incorporate the fire and EMS contract into one document for everything as we're doing this. So this is just kind of starting out here, and then we'll be making contact with the townships here very shortly to start this process.
Is this another where you want to bring it to council on the 10th, or?
We
For
can
information?
definitely share it with council, so that everyone's fully aware of the direction that we're heading.
Any other questions on that? Makes a lot of sense from my perspective. Thank you. All right, we are over time. So we have 2 items left on our agenda. Do we do those, or do we move those to the 10th?
Are we under any timeline?
No, we
to
can
get
definitely
them?
move those to the next meeting.
Okay.
Let's do that.
Mhm.
All right. So then we'll add those to the meeting on the 10th, which Lisa and I will be missing. So if anybody else is not going to be there, please let us know, because I can attend remotely if absolutely needed, so that we have a quorum. Anything else for the good of the cause? Anybody want to move?
I'll motion to adjourn.
Okay. We have a
Second.
Motion by Schumacher, second by Reeves. All in favor, please say aye.
Aye.
Aye? Any opposed? All right, we're adjourned. Thank you.